When an individual or business deposits money with a bank, they lend that money and the bank pays the depositor money on that, but it's actually a loan. You actually become an unsecured creditor to the bank. You are likely giving the control of your money to someone else, and they are charging you fees for managing it. And if you're lucky, they pay you a little bit of interest, but let's look at the amount they are charging today. And I got to be very honest with you, when I put this presentation together, I was shocked actually how much it is right now. And if we take a look at it, I just put together a screenshot of all the current bank accounts from all these financial institutions of what they're charging. If I just take a look at using 6.45 as an example per month times 12, that's $77.40 per year just to have an account in there. And let's just also even notice that, you're also limited with the amount of transactions that you have to pay. Your money that you're having to pay to access to. Well, what if you need something with more needs? Well, in that circumstance, if you want unlimited transactions, well, now you've got to pay for it. $15.95, 12 times a year. That's $191.40, almost $200. Even if you want to be more primo, then you're paying $30 times 12, and that's $360 per year just to maintain a premium account. Now, fractional banking is a financial system in which deposit-taking institutions like banks are required to keep as a reserve only a small fraction of all the money deposited with them. When an individual or business deposits money with a bank, they lend that money and the bank pays the depositor money on that, but it's actually a loan. You actually become an unsecured creditor to the bank. They set the rules on that interest to be paid. When you deposit that money, and what unsecured creditor means is they don't actually really owe you anything. I mean, they owe you, but when that money that has been deposited with the bank is used by the bank, obviously, I think we all know that it's used to start or originate loans for other customers who need financing. And so the deposit account owners who have lent their money to the bank can withdraw their money at any time. But in reality, at any given time, only a small fraction of that money that is initially deposited is available because it's been redeployed somewhere to be used. Well, why does fractional banking work? Well, the assumption is that not all depositors will demand their money at once. So this is why the main reason fractional banking exists, or why it's possible. Now, there's a real good question that maybe you might want to think about is, how safe is your money? Well, let me kind of show you some challenges that have happened a lot recently. And here's something that has really happened. China deploys tanks to protect banks from angry citizens seeking to withdraw savings. Widespread protests through China after 6 billion deposits reportedly vanished, prompting the CCP-controlled banks to freeze withdrawals in April. And you would think a developed country with a GDP significantly larger than Canada wouldn't resort to this, right? Now, let's kind of walk through how fractional reserve banking works. You deposit $100. Well, here's what's happening. A customer deposits the $100 and the bank keeps a reserve of $10 and then they loan out $90. Well, that $90 gets loaned out to someone and then it goes into someone else's another bank account, which there's $90. And they follow that same formula of 10% and do $9 as a reserve. And now they've loaned out $81. And then now that $81 goes back into another bank as a deposit and they keep a reserve of 8.1. And now they've loaned out 72.9. And we follow that all the way from that $100 deposit across the 6 banks. They were able to have $468.50 as a deposit. Really, what's in reserve is that $100, and they've loaned out $368.50. I'm sure if common citizens like us did this, well, things wouldn't look so good. But somehow, that $100 was able to magically balloon to $468.50, called fractional reserve banking. And here's something that, I just kind of want to share with you here is, well, I think you know how much they pay you in terms of interest. They pay about, if lucky, 1% of interest, depending on what type of vehicle you put it in. But when they lend you money, they definitely are not charging you a lot less than that 1%. They're charging you at least 3% in interest. How much did the banks make in 2020? In terms of the audited 2020 financial statements, if we kind of take a look at this in terms of all of these banks, and if you ever check out our YouTube channel, The Banker's Vault, you'll also see a video that my team members, Sarblo and Richard, also put together, and how much the banks make in 2020. Why was 2020 pivotal for me just to highlight is that if you remember, the government imposed lockdowns on you and the banks flourished. If we take a look at how much interest that they earned, the Bank of Nova Scotia earned $29,700, and the interest that they paid was $12,400. RBC was $34,083. Interest paid was $14,048 for a profit of $20,835. Now, this $20,835 is actually denoted in millions of dollars, meaning there's 6 more zeros that follows that. So that's $20 billion in interest that they've earned from the deposits that you've flowed to them, or you deposited your money into it. They've taken your money to redeploy that to earn almost 3 times the money that you've lent them.